Bitcoin Trading, Investing in and Mining Cryptocurrency, written by Giles Reeves, narrated by Warren Seegers. Introduction. Bitcoin, or BTC, is a new kind of digital currency with cryptographic keys that are spread out to a network of computers used by users and miners around the world, and is not controlled by a solitary organization or government. It's the first cryptocurrency that has gained the public's attention and is accepted by a growing number of traders. Like other currencies, users can use the digital currency to buy goods and services online, as well as in some physical stores that accept it as a form of payment. Currency traders can also trade bitcoins in Bitcoin exchanges. Chapter 1. Characteristics of Bitcoins. Privacy. When you send Bitcoins to a partner over the internet, the transactions will be registered in a blockchain. A list of transactions is public, and it can be verified on specialized websites. Only the identification number, the sum, and time are recorded. There is no way for somebody to find out where the Bitcoins come and where they go. This characteristic of Bitcoins attracted many people. Well, some of them are interested about Bitcoins because they can buy illegal goods with Bitcoins. The majority of Bitcoin users are people that want to buy legal items and services, but don't want to disclose their identity. Porn and gambling websites might be immoral, but they are not illegal. So people that want to subscribe to those services can safely pay in Bitcoin on the websites that accept this currency, knowing that their reputation will not be affected. Fast transactions. A Bitcoin transaction is processed within 10 to 15 minutes. A bank transfer might take hours or even days for the money to get from one account to the other. Some might say PayPal or other e-wallets are faster. But there are other aspects these e-wallets can't give, like privacy and smaller commissions. Smaller commissions. The average commission is 0.002 BTC per transaction. It's significantly smaller compared to the PayPal or banking commissions. Moreover, you are not even required to pay it. By paying a commission, you reserve the computational power of a pool, or at least part of it, to process your transaction faster. You even have the possibility of not paying the commission. In this case, you might need to wait 2 or 3 days for your transaction to be processed. If you're not in a hurry, this might be the perfect opportunity to make money transactions with zero costs. Of course, there are also disadvantages for using Bitcoins, such as the possibility to lose them. If someone steals your Bitcoins, or if you delete the wallet file, it's impossible to recover them. As long as Bitcoins are not regulated, there is no central organization for arbitrage between divergent parts. In other words, you can't complain if you lose or are robbed of your Bitcoins, because there is no one to complain to. Bitcoins are only part of the cryptocurrency world, and there are many other virtual currencies that might be a good alternative. Chapter 2. Mistakes you should avoid in Bitcoin trading. Not doing your own research. Don't go to one forum or one social media platform. Listen to what many are saying and then make a trading decision. You must do detailed research before making any move. Read charts, identify resistance and support zones to understand the current price. Learn to read trend lines and candlestick charts to know when the price will go down and up. If all of this sounds complex, then the least you can do is gather news from multiple sources and analyze which sources are more reliable and definite. Make sure the news resources are trustworthy. Never listen to one person or source. Listen to everyone, and then make your own decision by looking at the current price movement. Chapter 3. Trading. Panic buying and panic selling. This is the most common mistake among beginners. When they don't know how the market functions and how price moves, and they have invested money that they cannot afford to lose, they always end up panic selling. Just when they see the price falling, even a bit, the majority end up selling their Bitcoin, even when it means selling at a loss. They just want to save whatever money they can, knowing less the price regularly moves up and down. And at times, the down is even bigger due to some sudden news. But at the end, it always comes back to normal, back on track to climb higher. Similarly, when newbies see Bitcoin price rising, they panic buy, spending all their money in one go without doing any research. They hope the price will keep on increasing, but this doesn't always turn up well. The price can go down anytime. Of course, panic buying doesn't hurt in the long run, because the price will always rise in the end. But you do miss out on opportunities to make more money from trading. Spending all your money in a single purchase. Don't spend all your money in a single purchase, even when you have found the right entry point and you think the price has bottomed out and the bull run is only a matter of time. Don't spend all your money in one go, because forecasting the Bitcoin market is impossible. What if, after you spent all the money, the price drops further? You would go into a complete loss with no more money at hand to leverage this low price. In the same way, if the price continues going up, you can spend the money you have in hand in small chunks and make a decent profit instead of spending all at once. Remember, trading is not just about making big money, it's also about minimizing risks. Not setting stop loss and take profit positions. Different traders have different thresholds for risk taking. After a point, it might not be reasonable for you to take a loss. Likewise, after you have gotten the amount of profit that you had planned for, it might not be a very good idea to continue and risk the price falling. To counter both situations, you must set stop loss and take profit positions, meaning you must know at what point you should exit the trade when you are losing money and when you have made enough profit. This move helps you minimize the risk involved without compromising your financial goals. Trading with emotions. Never trade with emotions. It's a fundamental rule of trading in any instrument, be it Bitcoin or stock. Keep all your emotions at bay and make decisions logically. Don't get too attached to your holding. Understand that big Bitcoin price movements is quite common. Some days are bad, some days are good. Always rely on your logic and analysis when making buying and selling decisions. Never say, "I feel like." More often than not, emotional trading will bring you loss or stop you from making more profits. Becoming too greedy. When the price is going up, instead of exiting at the right time, after we have made a good profit, we continue with the flow hoping to make more profits. Never be too greedy. Always know when to take your profit, exit the game, and enjoy the show. Remember, when the price is moving up too fast, too soon, a correction is always coming from behind. So it's always a good decision to make an exit before the correction dip comes. When you're acting greedy, not only are you risking current profits, you're also depriving yourself of the opportunities to make more money when the price goes down. Stop acting greedily. Always have an exit plan. Chapter 4. How to buy Bitcoin. There is no uncertainty in the fact that Bitcoin trading is slowly taking the world of trading by storm. There is some hype which says Bitcoin trading can be dangerous and difficult. But honestly, it's a lot easier to get Bitcoins, even easier than you think it is. Here are some guidelines to buy Bitcoin. Find a wallet. First of all, you have to find an e-wallet. It's principally a store or a provider that offers software from where Bitcoins can be bought, stored, and traded. You can easily run it on your desktop, laptop, and even smartphones. Sign up. Next, you have to sign up with eWallet. You'll make an account that will let you store your Bitcoins. The e-wallet trader will offer you a chance to convert your local currency into Bitcoin. Therefore, the more local currency you have, the more Bitcoins you can purchase. Connect your bank account. After signing up, the trader has to connect his bank account with his trading account. For this purpose, some verification steps are to be performed. Once the verifications are performed, then you can start purchasing Bitcoins and get started. Buying and selling. Once you are done with your first purchase, your bank account will be debited and you will get the Bitcoins. Selling is done in the same way purchasing is done. Keep in mind that the price of Bitcoin changes continually. The e-wallet you are working with will show you the current exchange rate. You should be aware of the rate before you buy. Mining Bitcoin. Another way of purchasing Bitcoins is through mining. Mining of Bitcoin is similar to discovering gold from a mine. However, mining gold is time-consuming, and a lot of effort is required. The same is the case with mining Bitcoins. You have to solve a series of mathematical calculations that are designed by computer algorithms to win Bitcoins for free. This is nearly impossible for a beginner. Traders have to open a series of padlocks in order to solve the mathematical calculations. In this procedure, you do not have to involve any kind of money to win Bitcoins. It's simply brain work that lets you win Bitcoins for free. The miners have to run software in order to win Bitcoins with mining. Bitcoin is a digital currency that is here to stay for the long run. Ever since it has been introduced, the trading of Bitcoin has increased, and it is on the rise today. The value of Bitcoin has also increased with its popularity. It is a new type of currency, which many traders are finding attractive just because of its earning potentials. At some places, Bitcoins are even being used for purchasing commodities. Many online retailers are accepting Bitcoin for real-time purchases too. There is a lot of hope for Bitcoin in the coming era, so buying Bitcoins will not be a bad option. Chapter 5. How to sell Bitcoin. Cashing out your Bitcoins is not as direct as buying them. If you decide to sell your Bitcoins online, you can either do it via an exchange, direct trade, or carry out a peer-to-peer transaction. Outside of the comfort of your home, you can withdraw flat money using a Bitcoin ATM or sell your Bitcoins in person. Exchanges. Despite having several drawbacks, exchanges are a one-stop solution when it comes to trading Bitcoins. In the case of selling cryptocurrency, exchanges act as an intermediary that holds both the seller's and buyer's funds. First, you need to set up an account with an exchange of your choice. The absolute majority of reputable exchanges will require complete identity verification and a connected bank account so that you can withdraw your funds. Then you simply place a sell offer, stating the type of currency you wish to trade, its amount, and your asking price per unit. The exchange will automatically complete the transaction once someone matches your offer. After the funds are credited to your account, you will need to withdraw them to your connected bank account. This can sometimes take an excessive amount of time, especially if the exchange is experiencing issues with its banks or facing liquidity problems. Several months before its bankruptcy, the Mt. Gox exchange was experiencing this exact problem. Moreover, some banks just outright refuse to process transactions with funds obtained via cryptocurrency trading. It's also important to consider a fee you will need to pay in order to use some exchanges. For example, one of the world's biggest cryptocurrency exchanges, CEX.io, charges a flat fee of $50 for withdrawal via bank transfer, $3.80 if you're withdrawing your funds to a Visa card, and 1.2% of a transaction plus $3.80 if you're using a MasterCard. The withdrawal fees can be very drastic depending on an exchange, but transaction fees are almost either tiny or non-existent at all. In addition, most exchanges will have a limit on the amount of money you're allowed to store. The limit will increase over time if you stay loyal to a particular exchange. Finally, it is important to remember that despite offering wallet services, Exchanges are by no means a secure and reliable place to store your funds. They are very prone to hacker attacks. And there have also been instances of exchanges shutting down and running away with their users' funds. Hence, why you should take full responsibility for your own funds and store any amount that is not immediately needed in a secure offline wallet. Direct trades for selling Bitcoins. This service is accessible on websites, usually associated with exchanges, and includes an intermediary facilitating the connection. First, you will need to register as a seller. Apart from setting up your own profile, you will need to fully verify your identity. Once you're registered, you can post an offer indicating your intention to sell Bitcoins. When a buyer wants to trade with you, you get a notification from the service. From then on, you are only interacting with the buyer. The website merely serves as a platform to complete the trade. The process of selling Bitcoins on some of these sites can be quite involved and time-consuming. So, it is imperative to do your research before deciding on a trading platform and make sure you have the time and patience required. Some of the websites offering the option of direct trading are BitBargain, Bitilicious, Coinbase, Open Bitcoins, BitSquare, and Local Bitcoins. Chapter 6. Factors affecting the price of Bitcoin. Animal spirits. Economists have long had a notion that emotional factors affect investor decisions. This is called animal spirits and refers to investors making decisions based on the behavior of the other market participants and their own intuitions rather than hard analysts. Analysis of the price of Bitcoin shows that positive media coverage is one of the main factors driving the price. Positive media coverage of new technology causes a well-known hype cycle. A peak of hype is followed by a trough of disillusionment. This was most apparent in the early days of Bitcoin, when the mainstream press started to report on the new currency and caused a number of short price spikes and collapses. As media coverage increases and other factors are brought in, it's harder to distill the effect of the media alone. Political risks. Political risk around national currency may also affect the price of Bitcoin, as people use it to move against price movements in a particular currency, or they need to quickly move large amounts of value out of a country or currency. The 2015 economic crisis in Greece was followed by reports of increased buying of Bitcoin by Greek citizens wishing to protect their wealth. This did not seem to affect the price of Bitcoin on global markets, which remained steady between $300 and $400 for most of that year. But nervousness about the national referendum for Britain to leave the European Union, Brexit, on June 23, 2016 led to an increase in the price of Bitcoin alongside a decrease in the value of the British pound. The pound started plummeting around May 20, 2016. By July 25th, it was more than 10% below its pre-Brexit value. For the same period, the price of Bitcoin increased by over 65%. From 302 to 502 pounds. The election of Donald Trump as U.S. president was also followed by 2 months of steep rises in the price of Bitcoin. Many attributed this to the uncertainty of the U.S. economy. Regulatory moves. Regulators around the world have had to catch up to the growth of Bitcoin. They must decide, for instance, how it will be treated by the tax system, or whether and what regulations apply to its use. Two events in particular highlight the impact regulations can have on the price. The announcement that Bitcoin would be considered legal tender in Japan pushed the price of Bitcoin up 2% in just 24 hours and increased the price globally by 160% for the next 2 months. China's decision to shut down several Bitcoin exchanges and ban initial coin offerings, a form of crowdfunding often paid for with cryptocurrency, sent the price of Bitcoin plummeting by 29% in 24 hours. Chapter 7. How to invest in Bitcoin. Cryptocurrencies exist in an unregulated, decentralized digital sphere without involvement of or protection via a central bank. This is part of Bitcoin's appeal. People or entities can buy and sell cryptocurrency anonymously, and there are fewer middlemen taking a cut of the transaction. But it also means you just can't buy Bitcoin via mainstream investing tools like a brokerage account. One piece of good news: you can buy fractions up to the 8th decimal place of a Bitcoin. That means you don't need to plunk down the nearly $17,000 you often see quoted as the price for a full Bitcoin, which is probably for the best as noted previously. As of the release of this audiobook, that 1/10,000th, 4 decimal places, or 0.0001 of a Bitcoin was worth about $1.65. Beyond that, for most people, the best and simplest way to invest in Bitcoin starts with setting up a cryptocurrency wallet. Some of the better-known sites where you can do this are Coinbase, Bitstamp, and Bitfinex, although there are a number of other platforms out there. Once you establish an account, connect it to your payment source, a bank account, credit, or debit card, via two-factor authentication. Note, it's important to use a tool like Google Authenticator rather than just relying on a text-based authentication, which can be more vulnerable to cyber theft when investing in Bitcoin. Once you have purchased a Bitcoin, it stays in your digital wallet until you trade it, either by using it as currency for a purchase or selling it, which is technically trading it for American dollars or another currency of your choice. If you have a brokerage account, you can expect the Bitcoin user experience to be similar. As with a brokerage account, you're likely to pay transaction fees whenever you buy or sell. That means day trading Bitcoin probably isn't a great strategy, since those transaction fees could quickly eat up any profits. If you're using Bitcoin instead of PayPal or a similar online payment method, check first to see if the seller will charge you a fee for paying in Bitcoin. Although Bitcoin is technically anonymous, that doesn't mean you'll necessarily escape the watchful gaze of the IRS. As Money has previously explained, for tax purposes, Bitcoin is treated like a stock, in that a trade can trigger a capital gains tax bill. Chapter 8. When is it the right time to buy Bitcoin? As with any market, nothing is for sure. Throughout its history, Bitcoin has generally increased in value at a very fast pace, followed by a slow, steady downfall until it stabilizes. Use tools like Bitcoin Wisdom or CryptoWatch to analyze charts and understand Bitcoin's price history. Bitcoin is global and not affected by any single country's financial situation or stability. For example, speculation about the Chinese yuan devaluation has in the past caused more demand from China, which also pulled up the exchange rate on U.S. and Europe-based exchanges. Global chaos is generally seen as beneficial to Bitcoin's price, since Bitcoin is apolitical and sits outside the control or influence of any particular government. When thinking about how economics and politics will affect Bitcoin's price, it's important to think on a global scale and not just about what's happening in a single country. Chapter 9. Websites where you can buy and sell Bitcoins. Coinbase. When you use Coinbase, you are going to be able to automate the purchase of your Bitcoins for every week or month. It's a pretty easy platform to use whenever you're just getting started with Bitcoin buying and selling. However, if you're going to be performing any dubious activities that are in the gray zone of Bitcoins, then you might want to watch out for this site, as they are pretty strict about their policies. The company that runs Coinbase is very particular about what kind of activities can happen on this exchange. Kraken. Kraken is a Bitcoin service provider that's totally engrossed on trading of Bitcoins. You will be able to control and short on the platform, which makes it a great choice for a lot of Bitcoin traders out there. If you're worried about the legitimacy of the platform, don't worry. Kraken is amongst the first Bitcoin exchanges to clear an autonomous audit, which means that your transactions are completely safe on this site. If you're a trader of Bitcoin, then you definitely need to check this site out. However, when you use Kraken, you have to note one thing. you are going to have to set up a 2FA, or two-factor authentication, in order for your account to be kept on the site. Without that, your entire account will be deleted and drained, so watch out. Bitstamp. Bitstamp is the first licensed operator of Bitcoin. With this exchange, you are able to use your credit or debit card to do Bitcoin exchanges, which is a huge plus for many buyers and sellers out there. Another really huge advantage that comes with Bitstamp is the fact that you can take out your Bitcoins for actual physical gold. That's right, you're going to be able to take out your Bitcoins and receive actual gold in return. That's perfect for those of you who are keeping gold around for the rough economic times we might hit. Local Bitcoins. Local Bitcoins allows those who sell Bitcoins to connect with those who buy Bitcoins. Once you log onto the site, the next step will lead you to a page that's specific to your country and enables you to pick who you are going to buy or sell Bitcoins. There's a built-in escrow system, which is great for protection to ensure that you get your payment. This is the best system for those who prefer working with individuals rather than a large company. The drawback that comes with using this platform is the fact scammers can easily get on there and draw you in. You definitely don't want to get involved in a fake banking transaction, so make sure that you are careful when using this platform. While Bitcoins may sound like a currency of the future, the tax future of Bitcoins is uncertain. Being virtual currency, they are difficult to account for, and it is quite a task to convert their fluctuating values in terms of money. Then again, if one idea changed the way transactions take place, another brilliant one might provide a solution for this as well. Itbit. With this option, you're going to have to pay a small fee to become part of Itbit. Itbit has pretty good rates for Bitcoins, but that fee is going to make it a bit more expensive than it would be otherwise, which is good to keep in mind while you're trading. However, another important thing to note about this platform is there are premium services available to those of you who are trading in a large number of Bitcoins. OKCoin. OKCoin is perfect for both buyers and sellers of Bitcoins. You only get the nuts and bolts with this site. There are no flashy logos or cool effects, which is nice to an extent. It's a very practical site to use, so it won't take long for you to get used to using it. However, it is still a better and easier platform for those of you who are used to trading. You'll be able to pick up faster than a novice. BTCE. The best thing about BTCE is the fact that it is super transparent. You'll see the current price of Bitcoin at every moment you're on the site and all of the recent transactions, which is a great feature to have in a Bitcoin exchange. Another great thing that comes with this site is the chat box feature, which can help you out with helpful tips whenever you're trading. Chapter 10. The pros and cons of Bitcoin. Pros: no taxation. There are no taxes involved with Bitcoin. This should be music to many people. No need to pay additional taxes on your purchases. A high degree of privacy. Almost all Bitcoin transactions are extremely secure and very private. Users of Bitcoin use pseudonyms for their transactions. This high degree of privacy makes the use of Bitcoin very appealing to many people. Low transaction fees. Fees charged by online payment processors can be steep if the volume is high. Many merchants may balk at the fees and exchange costs over time. Since Bitcoin is not controlled, it has very low fees and it's still secure since it doesn't rely on one point of failure, as is common with normal payment processors. It's also much faster since there's no approval process or verification required because Bitcoin is extremely private. Bitcoin is deflationary. One of the unique features of Bitcoin is that only 21 million Bitcoins will be created. That is the limit. That means the value of coins will grow over time. It's simple to use. Bitcoin was made for the internet, and it's simply a dream to use. To send Bitcoin to someone, all you will have to do is key in the receiver's address and send. It's as fast as sending an email. No hassle, no waiting times, and an extremely flexible form of online payment. Bitcoin is not regulated. That means there are no banks or financial institutions manipulating Bitcoin to attain their own agenda. Bitcoin eliminates all third-party interference in the transactions. Nobody can freeze a Bitcoin account. Traditionally, money relies on trust. The people need to trust the banks that they place their money in. With the collapse of financial institutions, dodgy practices, runs on the bank, etc., many people have lost faith in banks and actually view these institutions as detrimental to society in general. The cons of Bitcoin. Bitcoin requires some learning. There is a learning curve involved when it comes to Bitcoin. Unlike traditional money that we are accustomed to using from an early age, Bitcoin is relatively new. The concept requires some study and understanding. There are not many comprehensive guides on the subject. Users will need to understand the terminology such as blockchain, cryptography, and mining. All these can be learned by using Google. If you truly wish to understand Bitcoin, there is more than enough information online to make you well-versed on the subject. It's not accepted in many places. Unlike PayPal, which has been widely adopted, most merchants have not started accepting Bitcoin as a means of payment yet. So, if you are a buyer, you may not be able to make purchases from many places. It's difficult to obtain. In the beginning, it was relatively easy to mine for Bitcoin. Now, as the number gets higher, it's getting extremely difficult to obtain Bitcoin. Thankfully, there are more Bitcoin exchanges opening with more willing sellers. Bitcoin transactions can be slow at times. Most Bitcoin transactions are fast, but since this is a peer-to-peer system, there is a time set for confirmation on the transaction. The bigger the transaction, the longer the wait. You can opt out for 0 confirmations and not have to wait as long, but it would be wise to wait. Bitcoin can be stolen. Even though Bitcoin is a digital currency, it can still be stolen. Many Bitcoin owners store their data in digital drives and secure these drives in safety deposits to ensure they're not stolen. You will have a digital wallet to protect your Bitcoin, but you must know how to do it correctly. Bitcoin wallets can be lost. If a hard drive crashes or a virus corrupts data and the wallet file is corrupted, Bitcoins have essentially been lost. There is nothing that can be done to recover it. These coins will be forever orphaned in the system. This can bankrupt a wealthy Bitcoin investor within seconds, with no form of recovery. The coins the investor owned will also be permanently orphaned. Bitcoin has no physical form. Since Bitcoins do not have a physical form, it cannot be used in physical stores. It would always have to be converted to other currencies. Cards with Bitcoin wallet information stored in them have been proposed, but there is no consensus on a particular system. Since there would be multiple competing systems, merchants would find it infeasible to support all Bitcoin cards, and therefore users would be forced to convert to Bitcoins anyway unless a universal system is proposed and implemented. Chapter 11. The best Bitcoin calculators for investors. Whether you want to analyze historic Bitcoin returns, calculate potential Bitcoin mining profitability, or simply find out how much Bitcoin you can buy for $10,000, there are free-to-use online calculators that cover all these functions. Here are the best. Probably the most important Bitcoin calculator that you will use as an investor in Bitcoin is a Bitcoin currency conversion calculator. This calculator allows you to check how much Bitcoin is currently worth in dollars or in other traditional currencies. An easy-to-use online calculator that allows you to convert any fiat currency amount into its Bitcoin equivalent and vice versa is the Bitcoin Currency Conversion Calculator by GoBitcoin.io. For example, using this calculator, you can find out how much $1,000 is worth in Bitcoin at its current market rate. The market rates you can choose from are from Coinbase, Bitsmap, and the CoinDesk BPI. You can also do this calculation for all major international currencies, which is why this calculator is very popular among international Bitcoin users. The best Bitcoin mining profitability calculator. If you are considering venturing into Bitcoin mining, you should first utilize a Bitcoin mining profitability calculator to get an idea of how profitable such a venture could be. The comparison platform, Crypto Compare, has one of the most user-friendly Bitcoin mining profitability calculators that can show you how much profit you will generate from mining Bitcoin, given the amount of mining power you have and the electricity costs you will incur. While this calculator can give you a rough estimate of how much profit you could generate, remember that the mining difficulty as well as the price of Bitcoin can fluctuate quite substantially, which will affect your actual mining profitability. Therefore, profit figures from Bitcoin mining profitability calculators can only be used as a guidance and are not set in stone. The Bitcoin Historic Return Calculator. If you want to analyze historic Bitcoin returns, the best calculator you can use is the Bitcoin Inflated Adjusted Return Calculator by the personal finance platform DQYDJ. This calculator lets you compute the average analyzed income Bitcoin has generated for any given time period since September 2010. It also allows you to adjust the returns for inflation to provide you with a real return on investment of holding Bitcoin. Alternatively, you can use the Investment Returns Calculator by the Bitcoin Retirement Investment Fund provider Bitcoin IRA, which allows you to calculate how much an investment in Bitcoin would be worth today for any given year from 2012 onward. While historic returns are by no means a guarantee for future returns, they can give you guidance on possible expected returns, which can be useful when building a broad, diversified portfolio of assets. Chapter 12. The Future of Bitcoin. The use of this currency provoked countries like Japan to jump into the current of BTC. This year, at least 250,000 stores are expected to receive legitimate transactions in June or July. Mexico is one of the countries in Latin America that has seen a place of opportunity in this sector. Bitso, a Mexican company, is a very good example of this. At the end of 2016, it had captured about 30,000 new customers in just 27 months. 20,000 of them had joined the company in the last quarter of that year. While Donald Trump was crowned the President of the United States and the Ford car plant abandoned its project in the Mexican state of San Luis Potosi, Bitso had a great day. Neither the political nor the economic environment affected it at all, unlike other currencies. The so-called market, cryptocurrencies or crypto coins, is less vulnerable to cyber attacks, unlike the dollar or euro, which recently were affected by the WannaCry virus, a computer worm that was in charge of encrypting the files on a computer and calling for a ransom payment before allowing access to them again. The future of Bitcoin lies in these kinds of crises, as it proves the reliability of technology and places innovation as an opportunity for growth in the financial realm, which in recent years has found greater penetration through digital forms and electronic payment methods. For instance, in places where communication and profitability of traditional economic systems is managed. Bitcoin's future conflict. There is a long way to go before Bitcoin becomes a globally accepted form of currency, virtual or not, with some countries having outright banned the use of Bitcoin, though the number of countries are diminishing, with the wider issue being the lack of regulation on Bitcoin itself, coupled with concerns over technology limitations. Technology development over the short to medium term will certainly influence the value of the markets as a global regulatory landscape develops. We would expect the usage and demand to increase, driving the value of these types of returns that are not apparent with cash, still currently maintaining its cash as king status. Whether investors consider Bitcoin as an alternative hedge or an investment remains to be seen. Either way, When considering the year-on-year surge in the value of Bitcoin, just shy of 200%, the only way is up should regulatory walls continue to fall and transaction volumes continue to rise, with Bitcoin hitting an all-time high of $1,400 this year. Bottlenecks will undoubtedly limit transaction volumes over the near term, leaving the door open for more traditional payment methods to compete. But it is only going to be a matter of time before payment systems are upgraded, and Bitcoin has the opportunity to become a primary payment mechanism. In the end, this success and evolution of Bitcoin across mainstream economies and beyond will likely boil down to the attitudes of central banks. The PBOC earlier in the year had announced that it would be making a greater effort to regulate the Bitcoin market, including establishing a task force to inspect and ensure Bitcoin exchanges had the appropriate anti-laundering systems, warning exchanges they would be closed down if in violation. The actions of the PBOC led to certain exchanges suspending activity, resulting in Bitcoin losses at the time. Ultimately, the fact that the PBOC is looking to clean up and increase oversight is a long-term positive and suggests that the use of Bitcoin will surge in the years ahead, despite the fall over the near term attributed to the increased oversight. The intentions of Satoshi Nakamoto was ultimately to knock central banks off their perch, the inventor of Bitcoin publicly discussing a distrust towards central banks. The evolution of Bitcoin has certainly opened the eyes of many, bringing into question the need for central banks, should Bitcoin become the currency of choice, as there would be no requirements for the issuance and settlement. The use of Bitcoin may remove certain roles of central bankers, but in the end, Bitcoin will never be responsible for or even be in the position to influence monetary policies. Central banks will continue to ultimately hold the fate of Bitcoin in their hands. Regulation and acceptance at the government level is vital to its success and continued evolution cross borders. For now, central banks appear to be diligently looking into technology that Bitcoin has introduced, looking to use the decentralized method of record keeping, more commonly known as the blockchain or distributed ledger. The incentive being to complete and log transactions in a real economy more effectively. The BOE and the PBOC are certainly advocates of the decentralized method that would allow the respective central banks to track their currency through the financial system in real time. The BOE has estimated that the use of a digital currency on a distributed ledger could add as much as 3% to a country's economic output through efficiency gains alone. FOMC members and the Fed chair have also talked positively on distributed ledgers, with voting member Brainerd having spoken on the benefits of the use of such innovative technology. Interestingly, the fact that central banks are beginning to embrace a technology, which had been developed to dethrone them, could ultimately cement the position and power of central banks, though it would be difficult for them to then attempt to unravel the very same technology in a bid to undermine Bitcoin down the road. Bitcoin may have a mixed following at present, but there are a number of countries that are ultimately considered Bitcoin-friendly, with the list likely to continue growing as more governments acknowledge and legitimize the use of Bitcoin. Chapter 13. The Bitcoin Protocol and how it works. Bitcoin is a form of digital cash that allows online payment between the buyer and the seller. It works as a digital ledger that records transactions and balances of accounts. Bitcoins are exchanged using the Bitcoin Protocol, built over the principles of cryptography. The protocol defines the procedure that is followed by a Bitcoin transaction from its creation, through validation and final confirmation. And the core of the protocol is the Bitcoin transaction mechanism. Bitcoins are spent from electronic Bitcoin wallets and are exchanged using Bitcoin transactions. In order to understand the protocol, let's first try to understand a transaction, the information it contains, and how this information is processed. Bitcoin transactions. A Bitcoin transaction essentially contains the following information. ID. Unique transaction ID, which is the SHA-256 double hash of the transaction data. Input. the Bitcoin addresses that identify the sources of the Bitcoins to be transferred. These are usually a previous transaction's output and are used to verify the sender and check the available balance. Amount: the number of Bitcoins to be transferred. Output: the receiver's Bitcoin address. In cases where there is leftover Bitcoin change, the output should also include an entry for the sender's address to send it back, to be collected as a transaction fee or sent to another receiver. Outputs from one transaction can be used as inputs for another transaction. This creates a chain of ownership as the Bitcoin valued is moved from address to address. Transaction validation. All digital cash transactions also need to be checked and verified for authenticity, duplicity, and cash availability. The validation of the transaction is not centralized and all participating nodes are authorized for it. A Bitcoin's wallet account that initiates a payment transaction is identified by a Bitcoin address and a pair of public and private keys. To enable verification of the sender's identity, transactions are digitally signed using the sender's private key and validated using its public key that is available to all nodes. The Bitcoin system orders the transactions into lists called blocks. These are subsequently linked to form a blockchain, a shared public ledger of all confirmed transactions. Transactions not yet included in the blockchain are unconfirmed and reversible. The miners confirm and write these transactions into the blockchain. To prevent double spending, a transaction is not marked confirmed until it has received a certain number of confirmations. Each Bitcoin mining node keeps a personal copy of the blockchain, which is updated whenever a new transaction arrives. As mentioned earlier, the GPU is a very efficient tool for the speedy mining of Bitcoins. It also tries to validate the current and previous transactions in the block by solving a mathematical puzzle called the proof of work. The successful node that solves the puzzle gets a Bitcoin reward. It's blockchain approved and accepted by all nodes. In terms of the transaction creation and validation process, the Bitcoin protocol can be stated as follows. A new transaction is broadcast to all participating nodes in the network. Each node collects new transactions into a block. Each node tries to validate the new transaction and all previous ones by finding a solution to the proof of work for the block. The node which finds the solution broadcasts the solved block to the network. Nodes validate the transaction in the block and accept the block. Nodes start working on the next block. A hash of the last accepted block is created and used as a reference in the next block. Summary: the Bitcoin protocol is based on a collaboration maintaining the Bitcoin ledger. The digital cash is transferred through transactions, which are confirmed only after validation of key criteria and joint consensus by participating nodes through a mathematical puzzle-based voting process. Chapter 14. Bitcoin mining. Bitcoin mining is the process by which transactions are verified and added to the public ledger, known as the blockchain, and also the means through which new Bitcoin are released. Anyone with access to the internet and suitable hardware can participate in mining. The mining process involves compiling recent transactions into blocks and trying to solve a computational difficult puzzle. The participant who solves the puzzle gets to place the next block on the blockchain and claim the rewards. The rewards, which incentivize mining, are both the transaction fee associated with the transactions compiled in the block, as well as newly released Bitcoin. The amount of new Bitcoin released with each mined block is called the block reward. The block reward is halved every 210,000 blocks, or roughly every 4 years. The block reward started at 50 in 2009. It is now 25 in 2014 and will continue to decrease. This diminishing block reward will result in a total release of Bitcoin that approaches 21 million. How hard are the puzzles involved in mining? Well, that depends on how much mining effort is being put into mining across the network. The difficulty of mining can be adjusted and is adjusted by the protocol every 216,000 blocks, or roughly every 2 weeks. The difficulty adjusts itself with the aim of keeping the rate of block discovery consistent. Thus, if more computational power is employed in mining, then the difficulty will adjust upwards to make mining harder. And if computational power is taken off the network, the opposite happens. The difficulty adjusts downward to make mining easier. In the earliest days of Bitcoin, mining was done with CPUs from normal desktop computers. Graphic cards, or graphic processor units, also known as GPUs, are more effective at mining than CPUs. As Bitcoin gained popularity, GPUs became dominant. Eventually, hardware known as an ASIC, which stands for Application-Specific Integrated Circuit, was designed specifically for mining Bitcoin. The first were released in 2013 and have been improved, with more efficient designs coming to market. Mining is competitive, and today can only be done profitably with the latest ASICs. When using CPUs, GPUs, or even the older ASICs, the cost of energy consumption is greater than the revenue generated. Top Bitcoin mining methods. Bitcoin mining is the method in which transactions on the Bitcoin blockchain are confirmed and processed. If there were no Bitcoin miners, the Bitcoin cryptocurrency would cease to function as no transactions would be confirmed. Those who perform the mining process are referred to as Bitcoin miners, and they're rewarded for their assistance with a percentage of the transaction fee charged to the Bitcoin user. Mining Bitcoin can be an effective way to earn extra money, and many individuals have now become full-time Bitcoin miners. Here are 3 main ways to mine Bitcoin and start earning money. The following are at the beginner level. Using a Bitcoin mining app. The easiest way to start mining Bitcoin is to simply download an app that does everything for you. Bitcoin Miner is a Windows 10 app that's free to download and use on Windows 10 PCs and tablets. It also works on Windows phones. Once the Bitcoin Miner app is downloaded, users simply need to enter their Bitcoin wallet address in the payout address settings screen and then press the Start button. That's all there is to it. The more powerful your device is, the more Bitcoin transactions it will be able to process. This means that a Windows phone may not earn much Bitcoin, but a Windows 10 computer that can perform heavy-duty tasks like video editing and playing major video game titles does have the potential to earn quite a bit. Mine Bitcoin in the cloud. A popular way to get in on the cryptocurrency mining craze is to pay someone else to do it for you, referred to as cloud mining. This process involves signing up for an account on a third party's website and paying them to mine Bitcoin and other cryptocurrencies for you. Typically, the more you pay, the more cryptocurrency your account will be able to mine. Cloud mining contracts usually last for a minimum of 9 years or so, though some can continue indefinitely. Mined cryptocurrency is sent to your designated wallet address on a regular basis, which makes it a cool way to earn residual income on a weekly or sometimes daily basis. The cryptocurrency that's mined almost always covers the cost of the initial payment. Genesis Mining is one of the more trustworthy cloud mining companies around. Their founder and CEO has even given a TED Talk about its creation and early days of Bitcoin mining. Genesis Mining offers Bitcoin mining contracts in addition to Litecoin, Ethereum, Monero, and a range of other cryptocurrencies. Advanced mining practices. Building a Bitcoin mining rig. Those looking to really invest in cryptocurrency mining will need to buy an application-specific integrated circuits or ASIC hardware device, often referred to as a mining rig. These are essentially processors that are made solely for mining Bitcoin, along with other crypto coins, and are intended to run non-stop all day, every day. ASIC miners are generally quite expensive and sell for several $1,000s. Running such a device also consumes a lot of electricity, so it can take a while. often over a year of continuous mining to begin earning a profit. The most popular brand of ASIC miners is Bitmain, with their Antminer miners. They often release newer models of their miners that are more efficient at mining Bitcoin and consuming energy. Consumers are also provided comprehensive support and setup guides aimed at both advanced miners and complete beginners. When using an ASIC mining device, you'll also need to download advanced mining software and join a mining pool. The software will tell the ASIC what to mine, where to mine, and who to send the mined Bitcoin to. The mining pool is a group of miners that choose to help each other mine and share the rewards. The most commonly recommended mining pool and program is Slush Pool and CG Miner. Those using a Bitmain miner may prefer to use their own program and mining pool due to their convenient and user-friendly interface. Why should you mine Bitcoin? In addition to earning extra money, mining a cryptocurrency can also be a way to support your preferred coin. Miners are needed to process all transactions on a crypto coin's blockchain. The more miners there are, the faster and more stable the coin will be. Why shouldn't you mine Bitcoin? Mining Bitcoin and other cryptocurrencies consume a lot of money, time, and resources. For most people, it can be almost as rewarding to simply purchase some Bitcoin from a service like Coinbase or CoinJar and let it increase in value while sitting in a wallet doing nothing. What are the difficulties in Bitcoin mining? The computational difficult problem. Bitcoin mining a block is difficult because the SHA-256 hash of a block's header must be lower than or equal to the target in order for the block to be accepted by the network. This problem can be simplified for explanation purposes. The hash of a block must start with a certain number of zeros. The probability of calculating a hash that starts with many zeros is very low. Therefore, many attempts must be made. In order to generate a new hash each round, a nonce is incremented. The Bitcoin Network Difficulty Matrix. The Bitcoin mining network difficulty is the measure of how difficult it is to find a new block compared to the easiest it can ever be. It is recalculated every 216,000 blocks to a value such as the previous 216,000 blocks would have been generated in exactly 2 weeks had everyone been mining at this difficulty. This will yield on average 1 block every 10 minutes. As more miners join, the rate of block creation will go up. As the rate of block generations go up, the difficulty rises to compensate, which will push the rate of block creation back down. Any blocks released by malicious miners that do not meet the required difficulty target will simply be rejected by everyone on the network and thus will be worthless. The block reward. When a block is discovered, the discoverer may award themselves a certain number of Bitcoins, which is agreed upon by everyone in the network. Currently, this bounty is 25 Bitcoins. This value will have every 210,000 blocks. Additionally, the miner is awarded the fee paid by users sending transactions. The fee is an incentive for the miner to include the transaction in their block. In the future, as the number of new Bitcoin miners are allowed to create in, each block dwindles. The fees will make up a much more important percentage of mining. Chapter 15. Ways to store your Bitcoin. Bitcoin is praised for giving its users full control over their funds. At the same time, more control comes with more responsibility to keep those funds safe. There are many different ways to secure your Bitcoins, each having its own pros and cons. This chapter, we will go over a few common and uncommon ways to store your Bitcoins, with a twist at the end. Storing Bitcoins on an exchange. The most common and easiest way to store your Bitcoins is on an exchange. There are many different exchanges available. You should research a Bitcoin exchange comparison chart to see which one might be right for you. Remember, though, that storing your Bitcoins on an exchange is not recommended for the simple fact that you do not have full control over your coins. Exchanges can get hacked or close your account down for one reason or another, and you could potentially lose all your funds. Not to say that exchanges do not have a place in the ecosystem. They are great for beginners to purchase Bitcoins and get familiar with the process of using them. Storing Bitcoins on an online wallet. A better way to store your Bitcoins would be at an online wallet. Blockchain.info and Green Address are just some of the options available for online wallets. To find the right wallet for you, find a Bitcoin wallet comparison chart and reviews. The good news is that using the services mentioned, you have full control over your coins, as you're able to extract the private keys from the wallets. However, the downside is that the private keys are also stored online, which make them vulnerable to hacks and potential zero-day exploits. If you are looking for a convenient way to store your Bitcoins and are not concerned about utmost security, you should give online wallets a chance. Storing Bitcoins in a desktop wallet. A more secure and still convenient option to store Bitcoins is to use desktop wallets. The best part is that the private keys are only stored on your local machine, meaning that exposure of the keys online is minimal. However, if your machine gets infected with Bitcoin stealing malware, consider your coins gone. Furthermore, depending on what desktop wallet solution you choose and how you set it up, you can transact Bitcoins more anonymously, as your IP address and email won't be linked to the Bitcoin wallet, unlike an online solution. Storing Bitcoins in a mobile wallet. Another secure and anonymous way is to store your Bitcoins on a mobile wallet. Wallets such as Mycelium and Bread Wallet are both great apps which you can download from your iPhone's App Store. The wallets do not require any personal information, so you can be confident your transactions are at least somewhat anonymous. Sure, your app will link your phone's ID or IMEI, but if the phone's a burner, it's hard to link the wallet to a real identity. Furthermore, online wallets store the keys on your phone, and in case that your phone is lost, you can always use the provided backup seed to restore your coins. Storing Bitcoins on a hardware wallet. One of the most secure ways to store your Bitcoins is on hardware wallets. Solutions such as Trezor, KeepKey, and Ledger are all great options if you are looking to increase the security of your funds. Furthermore, these wallets provide a completely anonymous option to transact cryptocurrency. Since no personal information is linked to the device, there is no identifying data to leak. The reason these devices are so secure is because the keys are stored on a dedicated piece of hardware. Malware will have a very hard time, most likely impossible, to get past the wallet's hardware security and steal your coins. Furthermore, just like any other wallets, you can easily recover the funds with a seed phrase in case the device is lost or broken. Storing Bitcoins on a paper wallet. Paper wallets aren't as popular as some other solutions, as they require more understanding of the protocol. You can generate a Bitcoin paper wallet at bitcoinpaperwallet.com, which will guide you on how to properly generate it. Furthermore, you can generate it offline for utmost security by disconnecting your computer from the internet when creating it. Paper wallets can be stored anywhere and do not take much space. The benefit is this is a 100% anonymous way of storing your coins, as a paper wallet is simply a Bitcoin seed on a piece of paper. If the piece of paper is properly secured, there is no way for hackers to steal it, as the wallet never touched the web in the first place. Storing Bitcoins on a multi-signature wallet. Another less common way to store your Bitcoin is on a multi-signature wallet. A multi-signature wallet requires multiple people to approve a transaction before it can go through. This would be a great solution to store Bitcoins that belong to multiple people. Let's say you don't want a single person to have control over your company's funds. You could set up a signature wallet that would require multiple executives to sign off on a transaction before it can get approved. Burying your Bitcoins. Now that we are done with the more obvious Bitcoin storage solutions, let's move on to the fun ones. If you are feeling extra paranoid of someone robbing your house or having access to your machine, you could print the paper wallet or use a hardware wallet like CryptoSteel and bury your Bitcoin in your backyard or in the woods. For more security, you could also back up the buried wallet on a paper wallet in case you forget where you buried it. Storing Bitcoins on your body. Another creative way to store your Bitcoins is on your body. While it may sound weird at first, tattooing a 12-word seed, or at least a phrase or sentence which would help you remember the seed, could be an idea worth entertaining. Obviously, if someone discovers the seed after seeing your tattoo, it may render the seed useless. It would probably be best to create a sort of cipher that only you know. This way, neither the tattooer nor any other person seeing the tattoo can break its encryption. Storing Bitcoins in your bank. While it may sound like the worst idea possible, storing Bitcoin in your bank may be more secure than you think. You can generate a paper wallet and place it in your safety deposit box. This way, your Bitcoins are both safe from robbery or house fire. They are also stored anonymously without the bank knowing. Conclusion: Bitcoin is a virtual currency. It doesn't even exist in a form as physical as monopoly money. It's electrons, not molecules, but consider how much cash you personally handle. Bitcoin, or BTC, is a new kind of digital currency with cryptographic keys that is decentralized to a network of computers used by users and miners around the world and is not controlled by a single organization or government. It is the first digital cryptocurrency that has gained the public's attention and is accepted by a growing number of merchants. Like other currencies, users can use a digital currency to buy goods and services online, as well as some physical stores that accept it as a form of payment. Currency traders can also trade Bitcoins in Bitcoin exchanges. Thanks again for buying this audiobook. If you have a minute, please leave a review. I take reviews seriously and always look at them. This way, you are helping me provide you better content that you will love in the future. A review doesn't have to be long. Just 1 or 2 sentences and a number of stars you find appropriate. Hopefully 5, of course. If I think your review is useful, I will mark it as helpful. This will help you become more known on Amazon as a decent reviewer and will ensure that more authors will contact you for free ebooks in the future. This is how we can help each other. This has been Bitcoin Trading, Investing in and Mining for Cryptocurrency. Written by Giles Reeves. Narrated by Warren Seegers. Copyright 2018 by Giles Reeves. Production copyright 2018 by Giles Reeves.